70. It's got momentum on its side, and now we're going to buy.
Good morning, everyone. My name is Keith Lockwood, the Chief Investment Officer at Schrock Financial Group. I haven't come up with a fancy name yet, so maybe we throw that out to you guys. Come up with some rhyming name that we can use for this segment. It is April 14th, so happy day before tax day. Hopefully everybody's good to go by now. I am not, so we're cutting it close. So reason I'm jumping on, we're going to do this a few times a year. So with this, we're going to basically do kind of a market update through the first quarter. We are a little bit into April, so we've had a pretty exciting April so far. So we'll talk about that a little bit. So there's a small thing going on in the world called war with Iran. So we'll touch on that a little bit and then go from there. So first, we'll kind of give the returns on how the year started. So the first quarter, it kind of, we talked about this in our last segment. The first quarter was opposite of last year. So the equal weight S&P crushed the actual S&P, and I got to go to my notes. So the first quarter, the equal weight was down 0.11%, so pretty much flat, while the S&P was down 4.63%. So that's a big discrepancy there, but that also means there's more stocks in the S&P 500 performing, and not just the top 10. And on that, the NASDAQ was down negative 5.98%, so almost 6%. Now, that's through March 31st. And so far in April, we've made up all the gains, and as of yesterday, that we had lost from the war. So the S&P went positive year-to-date yesterday. It's actually up 0.6 for the year. The equal weight's up 3.7, so that still has continued its dominance. And the NASDAQ has made up all its losses. It's up 0.53%. So through yesterday, all the losses from the war have been recovered. So that's really good news when it comes to that. We're in that 2-week ceasefire. You don't know what to believe anymore when it comes to news reporting. Because there's so many different opinions out there and what's going on. So kind of just waiting that out. And the market has been very resilient. And that's mainly because, companies are doing well. Earnings are doing well. The consumer on the top end is still doing well. So that's pushing the market forward when it comes to that. We just started earnings this week for quarterly earnings. And so they're supposed to be, it's like a 10 to 12% increase from, last quarter. And so far, so good. So you've had basically the big financials, some healthcare stocks that have reported, the JP Morgans, Goldman Sachs, Johnson & Johnson, BlackRock, they have all beat their earnings. And then even this morning, Citigroup had earnings that were phenomenal. They just blew away what was expected. So, and that's kind of what we look for during earnings season. You will see a lot more movement in the portfolios during earnings seasons. So we kind of look for anomalies. Companies that have either done really well or their forward projections are pretty good. And maybe it's a down day overall in the market, so they're getting hit because of that. Or, some companies just don't perform the day of or the day after earnings. A company like Netflix, I think they report tomorrow or Thursday, but they usually don't perform after earnings no matter what happens. So if they have good earnings, you kind of wait a day and get in and say, okay, here we go. So, and that's a company or a stock that has become one of our largest holdings here in our portfolio. So that's kind of what's happened numbers-wise up to where we're at. And, last time we talked about technical analysis. So, last week the S&P 500 crossed over some moving averages. So both the 50-day and the 200-day, and that's what we look at. So the 50-day moving average is basically you take the average close of the last 50 days, and that's that number. And then the 200-day, same thing, the average close for 200 days. When you bust through those numbers, that's a positive. That's a bullish sentiment. Now you got to stay above that for it to remain bullish, and that's what's happened. It went through it last week, and it's remained above it. As of yesterday's close, the 50-day moving average was like 67.30, and the 200-day was 66.75. The close yesterday was 68.86. So we are well above those. So technically, everything looks good, and it's a bullish number. So that's kind of where we're at now. So what are some headwinds moving forward? So far, technical both looks good. Fundamental as far as earnings look good. So what may be some headwinds that say, what could cause the market to pull back here? Well, one, if the ceasefire, doesn't happen, or if, something geopolitically comes about, which may happen. And inflation right now is sticky. PPI, which is what producers pay, and producers kind of try to push forward on the consumer, was 4% this morning, year over year, which is a high number. CPI came out earlier this week, and that was 3.2%. So that's what consumers are paying. So that's a high number based off of recent history, and well above what the Fed is trying to do. The Fed's point is at 2%. So, and that doesn't have the ramifications of the war in there yet. So it does have the tariffs in there. That's already hit that inflation number. But the war inflation hasn't really hit that number yet. So a little worried about that. Biggest worry moving forward is something that is called stagflation. So that's where you have inflation. And inflation in and of itself isn't bad if you have growth. But if you have inflation and no growth, it's kind of the worst economic environment you can be in. And that's the worry right now is, if AI growth doesn't continue and inflation continues to be above, average levels where we're comfortable with, you have that zero growth and high inflation, that becomes a pretty bad economic condition. So that's something we're looking at, and we're trying to monitor, and hopefully it doesn't come to fruition. So speaking of like tariffs, a tariff is a tax. That's really, you come down to it. The average increase per person basically for the tariff was $2,000 to $3,000, which doesn't sound like a lot of money, but that is right. And that was supposed to be made up, with the big beautiful bill. Tax refunds were supposed to increase, which they have. The average tax refund this year is $3,500. Which is about a 15 to 20% increase. So, but that's basically leveling out what households are paying in tariffs. So you're really not getting a real return there. It's a nominal, but not a real return there. So, but going back to some positives for the market, right? That refund is a positive for the market. That's going to be spent, in the economy somewhere. So with companies. The other positive is, the Trump accounts open up here, I think it's June, where, any baby born between 2025 and 2028 gets $1,000 put into a Trump account. Now you have to apply for that. So if you know anybody who has kids under the age of 18 months, they need to fill out an IRS form and get a Trump account open. It's $1,000 put in by the government, right? So, and that IRS form is 4547. I had to look at my notes again. I don't know. Make sure that you know somebody that they do that as well. And that's a positive for the market, right? That's going to be invested. So that's $1,000 times how many babies born in the last 18 months. And then moving forward, right? So the more money goes in the market, the market's going to go up based on that. So things are pretty good right now as far as technically and fundamentally. There's still a lot of uncertainty out there with geopolitically. So that is a worry, but the market's been very resilient. One note, going back to the Korean War, which is in the 50s, there's been 6 or 7 big geopolitical events, stuff like wars or COVID or whatever. The average return 12 months later after the start of those geopolitical events is 14.2%. So initially you're probably going to see downside, which we did, and we may even see more downside. 6150, 6200 in the S&P, which is about 10% down from where we are now, is kind of that capitulation where, there are no buyers that come in, and that's kind of the number we got to hit if there's capitulation that happens in the market. Right now we have buyers that are helping with that. But things are pretty good. So, and history tells us, a year later things will be okay. That's higher than what the average is. And I think there are 7 events, and of those 7 events, 5 were higher, 2 were lower. So, that's positive on that side too. So kind of that update is, we're looking if stagflation is going to hit, what that inflation is going to look like, what's growth look like, current earnings season, is that growth of 10 to 12% really going to happen? And so far it has. Looking for some of those anomalies. Make sure you get your Trump accounts opened, especially filing, with the IRS right now. And that's kind of where we're at. So if you have any questions, as always, reach out to your advisor. They'll get straight to me. So again, and if anybody has an idea for a name that rhymes or doesn't rhyme for this segment, send that in as well. So thanks everybody for your time. Have a happy tax day. Bye now.
Say it just went through 70. It's got momentum on its side. Now we're going to buy.